Hello and welcome to this special interview. I am Prashant and with me is my colleague Sonia. Sonia, hi. I mean, markets locally and globally remain quite volatile with lots of fireworks, as I guess they should be around this time of the year, Diwali time. But this is always a good time to listen to the wise. And who better than to talk to someone like Navneet Munot of HDFC AMC, who's with us here in our studios today.
Absolutely, and someone with, I think, almost 3 decades of market experience. So, Navneet, thank you so much for joining us. Happy Diwali to you, to your entire family. It's been a challenging year, but a year in which India has sort of come out unscathed, if you want to call it that. How are you feeling this Samvat?
No, feeling great, Sonia and Prashant. Happy Diwali to you, CNBC family and all the viewers. After 2 years of all the fears around pandemic, now everybody is vaccinated. Everybody is looking very jubilant to celebrate this Diwali. And relative to what's happening in the rest of the world, I'm sure in India, everybody is feeling pretty good. On a relative basis, I think touch wood, India has been doing extraordinarily well. And I think we are all looking forward to the Amrit Kal that has just started for India over the next 25 years.
Will we get by like this through next year as well? I mean, will we continue the streak of outperformance? That is the question, isn't it?
So, Sonia mentioned about the last 3 decades, and we always used to say earlier that if US economy or if the global markets have, sneeze, India has a fever. This time the world has got a fever, we are yet to sneeze. So we have come a long way, no doubt about it. And look at the policymakers globally versus the policymakers in India. They are so focused on growth, on ease of doing business, on ease of living for their citizens. And it's a coincidence that India is taking leadership of G20 at an opportune time. Look at the leadership in the world. I think they need India to have that optimistic view about the future. Given the geopolitical uncertainty in the world. So I say this, that the world is geopolitically realigning, digitally redesigning, and demographically diverging. And within that, this looks like a movement for India. We are that oasis of hope when the growth is slowing down in the world, and in fact the central banks are trying to engineer a recession so that they can have a soft landing. You look at the leverage levels in the world, you look at the aging population, and you look at the lack of the growth drivers and variety of other challenges. Look at the Europe, look at UK, look at what US is going through. A prime minister getting shot dead in Japan. Look at the developed world. We are not even talking about the emerging markets. And you compare that with India, where you are so excited about the growth, whether you look at the government sector, corporate sector, or the households. I think things couldn't have been better. Notwithstanding the valuations, a lot of this is also reflecting in the premium valuations. So in my career, I haven't seen MSCI emerging market versus MSCI India. India outperforming by 20% or so, right, Prashant? I think almost 20% YTD. Despite the fact that global liquidity has shrunk, foreigners have been a net seller YTD. Despite the fact that inflation has gone up, interest rates are back to pre-pandemic level, and India is.
But one of the big reasons, Sonia, is that retail inflows into funds like HDFC AMC has been so strong, right? Last couple of years, Navneet, you would agree, and that has remained rock solid. SIPs, for example, last month were hit another new high. So that is a solid part which kind of is supporting the market, isn't it?
So you can take a lot of credit for that. I think media has played a big role. Our regulators have played a big role. Policymakers have played a big role. And so are our partners. And I think credit to industry. The resilience retail investors have provided to our market is something very new. So historically, foreign investors have always been positive on India for 2 reasons. One is that the macro story has always been very strong, long-term sustainable growth story. At micro level, you always get, on a bottom-up basis, several stocks across variety of sectors to choose from. World-class companies, high-quality governance, and the growth prospects. The third element that has got added to that, to the comfort of the global investors, is the liquidity now in our market. I think the resilience, that sustained flow of domestic money, month after month, the SIP flows and the flow that come to other domestic institutional investors had added another positive dimension to Indian market. I must say this, in case you have not realized, this year, Indian equity market, Indian bond market, Indian currency market would be one of the least volatile, if not the least volatile markets in the world.
Actually, to be fair, you know, if last Diwali anyone would have told us that we would have had just a 5% fall amidst what a raging pandemic, 4-decade high inflation, slow growth across the world, central banks hiking rate, people would have taken it with both hands, right?
And the biggest war in the heart of Europe since World War II.
And this huge energy
we can
crisis.
go on,
Yes.
absolutely.
But,
Hundreds of basis point of increase in global interest rates. Had I told you this year, or maybe at the beginning of the year, you would have thought that markets would be substantially lower.
So, you know, if you map between last Samvat and now, right, the consumption piece has done very well, whether it's FMCG, whether it's autos, and you're seeing it. I mean, you step out of your house and you'll see, especially in premiumization, right, premium cars, houses are being sold. Do you think this is a trend that can continue?
So both, I mean, if you look at all the high frequency indicators, some of them you talked about, or you add the railway freight, GST collection, I mean, air traffic, so on and so forth, or you look at anecdotal evidence, I mean, you travel and you feel that buzz. I think a lot of people say when they come back from Europe or other parts of the world, I think we get a little gloomy about what's happening in the world, but when you come back, you see a sense of positivity here. I think all the global investors or global visitors who have traveled to India. So I think if we split consumption, so let's say overall economy, 2/3 consumption, 1/3 investment. On the 2/3 consumption part, if you split between the urban consumption and the rural consumption, on the urban consumption side, because wages have gone up, and of course, there's a lot of pent-up demand post-pandemic. So I think we are seeing that consumption coming back. On the rural side, monsoon has been pretty decent. Of course, the spatial distribution has not been as great, but we expect over a period of time, I think that should also do well. One of the reasons has been the government's policies over the last several years in terms of spreading a high quality social security net in India, like food reaching 800 million people every month. It's incredible. And what we have done with the basic social security net is incredible. On the investment side is a more interesting story. And if you again split that into government investment, corporate investment, and household investment, government has been extremely focused on investments. On the corporate side, balance sheets have never been as good, at least in last 1 decade. Capacity utilization has gone up. China +1 and all the other opportunities from the domestic economy. I think the newer opportunities, the climate transition is leading to energy transition, transportation transition. So variety of opportunities on the investment side. And on the household side, clearly, I think the home affordability has been pretty good, and then they are also looking to invest after 2 years of pandemic.
So is it investment or consumption which is going to do
I think
very well?
It's both. Of course, I think once the pent-up demand from pandemic, I think at some point in time that slows down a bit. But overall, if you take a structural view over the next several years, we have always seen that when investment cycle kicks in, the sustainability of consumption cycle also becomes robust. Yeah, simply, you need newer jobs and higher incomes for consumption to sustain. Beyond a point, you cannot have just leverage-driven consumption, which was the case for a couple of years when investment cycle was
so the best way to play both is actually banking and financial services. Both feed into that, isn't it?
Yeah, that's one of the better way. And again, I mean, talking about that sector, I look at from a credit quality perspective, they haven't seen as good a time in last several years. Credit growth has never been as high as it is today, and I think both, as we said, household and the corporate side, there's still a lot of growth for credit growth over the next several years. And the automation, I think the investments that we have made in technology, and PM just inaugurated those digital banking units, and government's focus on digital banking, on digital finance, on financial inclusion in a country which is financially underserved but digitally very well served or digitally well penetrated. You have digital savvy, financially under-penetrated population. I think financial services have a lot of potential to grow.
But Navneet, how high is the possibility that perhaps this is a market that may not see too much price correction, but there may be a painful and frustrating time correction purely because of the global challenges?
No, you are absolutely right. I think we cannot remain completely insulated from what's happening in the rest of the world. Of course, we may have, I mean, decoupling is a very strong word. Maybe I think on a relative basis, economy is doing better. Our corporate sector is likely to do better. Consumers are likely to do better relative to the rest of the world. Policymakers have done an outstanding job. Having said that, still, whether through trade channels or through the liquidity channels, whatever is happening in the world is going to impact us. So you are right. I think if we look at the valuations, I think the valuation premium, whether you look at compared to our own history, compared to other emerging markets, I think look market cap to GDP, look at earnings yield versus bond yield, everywhere I think the valuations are on the higher side. So over a period of time, returns have to come more from the earnings growth rather than a more P re-rating. There's a possibility of bit of de-rating as well.
You started life as a debt fund on the debt side, right, Navneet? So I have to ask you this, in a rising interest rate environment, I mean, equities may be very interestingly poised, but so is fixed income. What's the right asset allocation, and what's the right way to think about that at this juncture?
So the last 5 years, if we see the growth of the mutual fund industry, a large part of that has come from the equity side, not so much from the fixed income side. Fixed income AUM as a percentage of bank deposits or as a percentage of GDP hasn't grown much. I think at these rates, there is potential for much higher penetration of debt funds among the retail investors also. And these are pretty attractive rates. And not only in India, even globally, I think bonds as an asset class is likely to come back. 2-year US Treasury at like 4.5%. I think it was close to zero a year back. So globally, I think bonds are likely to come back as a major asset class next year.
But the hurdle for equities goes up in that sense, right?
No, you are absolutely right. That's why I mentioned about bond yield versus the earnings yield also. I think that's like a 2% as a multi-year high, yeah. So both, I mean, so equities we have to take a longer term view that we are in a new economic cycle, a positive, I would say, an earnings cycle in India, notwithstanding the near term pressure because of the higher inflation or because of the higher rates or because of the global environment. Structurally over the next several years as investment cycle kicks in, and Indian growth story reflects in the higher corporate earnings because we, I think, bottomed a couple of years back. We've just started rising on that chart. But that, I think, also at these levels is an attractive asset class for investors. That cannot be ignored.
Okay, so before we wind up, there is this little bit of a FOMO feeling, right, that retail investors have. I mean, give and take everything, our markets are what, 5-6% away from the 52-week highs. What is your advice to them? Is this the time to go all in because you are very optimistic on the market? Or do you think one should wait? There are better levels that you can get.
No, I think as we keep repeating the same thing, even at the cost of repeating, it might sound like a cliche. It's not the timing, is a time in the market that decides your long-term returns. I think stay with your asset allocation, stay disciplined. I think the people who have shown that discipline are the ones who have been able to compound money over a period of time. Valuations are definitely on the higher side, but you have to look at the prospects of the Indian economy over the next several years, and you don't want to miss out on that opportunity as well. So I think stay invested, stay disciplined.
Time in the market, not timing the market.
Absolutely.
So, absolutely right. And Navneet, thanks so much for dropping by. From all of us, wishing you, your team, your family a very happy Diwali once again.
Thank you so much. Wish you all a very, very happy Diwali.
Thanks, Navneet. Well, that is it on this special, Samvat special. From Sonia, me, everyone on the team, thanks for watching. Goodbye.